Welcome to my weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through a key event I believe will be driving your investments in the coming days. Now, moving into this week, we've got a lot happening actually. We've had non-farm payrolls last Friday. We also had the US firing the first shot in this so-called trade war with China. And also we've had over the weekend some Brexit developments which have really had an impact on sterling. So this non-farm payrolls report and the trade tariffs dispute, I think, are key factors for the dollar. The initiation of these trade tariffs by the US seems to have been marked a bit of a low actually for the dollar. We've started to see a bit of traction in a correction. Perhaps the fact that it sort of now solidifies the expectations a little bit more seems to be that the market's moving against the dollar, and add in the fact that we've had this payrolls report whereby average hourly earnings again didn't pick up really, and it sort of was a feather in the cap really for the doves on the FOMC committee. There's no real need for the FOMC to push forward aggressively with monetary policy, and hence why we're seeing a bit of a dollar correction now. It'll be interesting to see if this sort of manifests itself into something more of a considerable correction, but that will, I think, depend on how the trade tariffs dispute really sort of starts to sort of snowball now, whether the US continues to ramp up, whether China retaliates in kind, and then it all sort of goes tit for tat, but also on a more permanent basis, rather than just sort of suggesting that the tariffs are going to happen. You're actually putting it into place. Now, is that going to happen? Unsure at the moment, but certainly that's what the markets will be factoring in the weeks ahead. Now, the Brexit factors was the fact that the UK cabinet made a decision on sort of going down a more softer Brexit route. It actually will sort of help to solidify and help to support sterling to an extent if it can politically be sort of palatable to the hard right Brexiteers on the Conservative Party, and certainly it will help to be supportive if Theresa May can stay in her job, really, I think, for sterling, because anything supportive for a softer Brexit is supportive for sterling going forward. And that has helped to certainly drive sterling higher on Monday. Now, through this week, we've also got a focus on US inflation with the CPI data on Thursday. Now, this is important because last week we had the average hourly earnings, which again, as I said, didn't really move forward. So we've got the CPI this Thursday, also the PPI the day before, but the CPI, Consumer Price Index data, on Thursday will be important. If that remains high, 2.8%, again, that sort of doesn't really help the US go ahead for a more sort of hawkish policy, and it'll be a sort of a driver of potentially a dollar correction if that were to be the case. So how does that affect across forex markets? Well, as I said, the weaker dollar has started to play out, and that's helped to drive euro dollar through 17.20, which was a key near-term resistance. That's opened 18.50. Sterling dollar above 33.15, that opens 34.50. Now, these are all factors that are playing into a dollar index correction below 94.20, which actually now sort of opens the June lows on the dollar index of 93.20 area. So these are all sort of coinciding with each other, these levels, and it'll be interesting to see if this starts to sort of generate some momentum of a correction in the dollar now. Not really seeing a great deal of traction on dollar yen, which is interesting as well, because the dollar yen, or both the dollar and the yen, have sort of played out as safe haven plays in recent weeks, and the dollar, which comes with the initiation of the trade tariffs, it's sort of looking a little bit more corrective now. So the yen is not really sort of picking up either, and hence why we're seeing a fairly flat dollar yen. We've got a Bank of Canada meeting this week. Are we going to see a rate hike? The sort of chances are possibly that we will. So we've seen the Canadian dollar, which has been strengthening recently, not a million miles away from $1.30 again against the US. So watch out for that. And also we've seen again another dollar factor whereby the Australian dollar has broken higher through 74.55 resistance. So in terms of equity markets, what we have seen is a recovery in risk sentiment, actually. That was driven by the S&P 500 on Friday, breaking sharply through resistance. 2790 is now open as an area of the next resistance, key resistance that is, to be tested. So that will be interesting to see if we now start to see a move towards testing that resistance. And you've got the DAX, which has been sort of playing around with the risk sentiment argument as well, but equally it's been rallying recently and gone through the resistance at 12,440, and it now is implying sort of a test of the key neckline, the key medium pivot level of 12,600 on the DAX. If that can be broken to the upside, then that is a really strong indication of further gains. Similar that we've seen the move on FTSE 100, whereby we've seen a rally back towards a key resistance area as well, 7,680. Again, that's a level that has been a pivot in recent weeks, and it'll be interesting to see if FTSE can break through a downtrend channel to sort of move to the upside once again and regain the bull initiative. As for commodities, well, I say it every week, but gold is a play on the dollar. Dollar correction helps to drive gold support, and what we have seen is the gold price rallying through the 1261 key resistance this morning. Can that be maintained? Can the market now close above that? Because if it does, it completes a small base pattern and implies 1282 again, and that is an area of the next overhead supply to be tested. And oil, which has been choppy recently. We've had a recovery from the OPEC meeting. It started to lose a bit of steam though, and it'll be interesting to see if the bulls can get back on track this week. The technical momentum signals are a little bit tired perhaps, and it's looking at some supports that perhaps if they start to break down, we could open some further downside. So it'll be interesting to watch the support levels on both the WTI and Brent crude as a driver of near-term direction potentially. So through this week, we've got the Chinese inflation actually on Tuesday, again in a sentiment and risk appetite indicator there, but also we're looking at UK trade balance. US PPI will be a bit of an indicator potentially for CPI on the Thursday, but more focus certainly on the consumer based inflation on Thursday. On Wednesday also we've got the Bank of Canada rates decision, so watch out for that at 3 o'clock. That could be a rate hike there, but generally speaking it's the US inflation data that we need to watch out for on the calendar this week. So I wish you good luck in your trading this week, and I will speak to you again next time.